In today's video, we're going to talk about how to report interest and dividends from your tax statement, the 1099-B, yeah, that big packet you get from your investment firm, how to report that information on your tax return. My name is Mike the CPA. Welcome to Money and Life TV. If you're brand new here, we make videos that cover finances, investing, and taxes. Subscribe to the channel to join our community and follow our weekly videos around these various topics to help you build wealth. The 1099-B deals with reporting and summarizing your investment information on your tax forms. A lot of times when I meet a new client, this is the point at which they give up when they're trying to file their taxes on their own. Maybe they've filed it on their own up to that point, but once investments hit, they feel really uncomfortable. Things start to get a little confusing. That's when they usually seek out a professional. I will have another video that's going to do a follow-up to this that's going to talk about reporting the stock sales or ETF sales or mutual fund sales in a video coming out in the next week or so, as we're going to be talking about the 1099-B, and we're going to be looking at the dividends, ordinary versus qualified dividends. An important thing to remember is that your federal tax forms are going to be different than your state tax forms. And what I mean by that is the way those dividends are taxed on a federal basis might be taxed differently on a state basis. It just all depends on what the rules are for the state you reside in. Coming off camera for you guys so you can see this full screen, so you can see all the detail. We just have Chipper the cockatiel. He's filing single. Just gonna scroll down here, and what we're gonna be getting at is how do we get these numbers right here? This would be the qualified dividend amount. This would be the ordinary dividend amount. We're gonna see how that information transfers from the 1099-B to the tax forms. I forgot to include some interest in this example. I did not have time to go back and reprint all these forms. I'm sorry, but I'll still show you some interest. We're gonna make up an amount and we're gonna show it for you here so you understand how it works and what it should look like. And let's start with the dividends because that's actually the more complex part of this, but I don't think you're gonna find it that complex. This information for the dividends comes from a 1099-B. Now, this is what a 1099-B looks like from a taxable brokerage account. You would not get this statement if you have an IRA, a Roth IRA. If you take distributions out of your retirement accounts from your IRA or Roth IRA or 401k, that information is going to come to you on a 1099-R. It's not going to come to you on something like this. The only time you're going to see statements like this is if you have a normal, non-retirement, taxable brokerage account. Just want to clarify that. This part you're really looking at, and honestly, it's going to help you fill out most of this form really easily, is this part with dividend distributions right here. This is the total ordinary dividend amount. Qualified dividend portion of that is $2,647. Sometimes people ask me if there's actually this plus this combined, if these are like different dividends. These qualified dividends are the same as these. However, this amount right here, the $2,000 of this, the $2,600, it gets taxed at a special capital gain tax rate, where the other portion of that is not qualified, which is what? How much of that is not qualified? So if I take $3,511 minus $2,647, so roughly $864 of these dividends will be taxed at higher ordinary income tax rates, but the majority of them will be taxed at lower capital gain rates. And I have investment videos that cover that and explain all that. I'm not going to cover it too much here, but I just wanted to point that out. All you're really doing is you're taking this total and you're plopping it down. Let me switch back to the tax form. You're plopping down the ordinary dividend amount here of $3,511. And you're plopping down the $2,648 here for the qualified dividend amount. Like it's seriously that simple. It really is. Once you have either combined interest or with dividends of over $1,500, you're going to also report that information on a summary schedule called interest and ordinary dividends. This is known as Schedule B. So your interest would be reported up here, and your dividends would be reported down here. Now, the interesting part is you don't report your qualified dividends here. Capital gain distributions are not considered dividends, and they actually get reported on Schedule D. Schedule D is where stock sales are normally reported, but also capital gain distributions are reported there as well. This is Schedule D. Now, normally we would report all of our stock sales, gains and losses here, right? This is where this would be reported, and we're going to cover that in the next part of this series on the 1099-B. But here's our capital gain distribution. So our capital gain distributions actually show up right here on line 13, and that's where those are reported. Before we move on from capital gain distributions, I just want to point out that they do come across on page 1 of your 1040, and they come across on line 7 right here. That's where the $130 are coming through. The next part of the 1099B has on captured section 1250 gain. Where does this go? This also shows up on the Schedule D, but it's on Schedule D page 2. So this is Schedule D page 1. So let me go down to the next page. Right here on page 2 of Schedule D, as you can see right here, there you see that on line 19, the on recaptured section 1250 gain worksheet. Section 1250 gains are taxed at a special tax rate as well. I'm not going to go into the detail on that, but essentially that's where those two numbers go. The $25 of on recaptured gains really come through more so on the worksheet, for your capital gain tax rates, which we're going to look at in just a little bit, but they don't show up on the front page of anywhere. Whereas your capital gain distributions may, and of course your ordinary and qualified dividends would show up on the main page of your 1040. On line 3, the non-dividend distributions, I'm not going to go into too much detail here, but really this is something that your software should have an input for. You can drop it in, but it's more so an informational item, more so than anything else. I don't necessarily see that affecting people, but it is there, and it's just for you to input to make sure your return is complete. But it's not something that really that I've seen personally make a big difference on people's tax returns. Line 5 of the 1099B deals with section 199A dividends, which is really the qualified business income deduction for certain types of income. This $592, that is coming from REITs, or real estate investment trust, and that's where that comes from. And let's see where this shows up on your tax forms. I've talked about this once before in one of my other tax videos, but for the QBI deduction, you can get up to 20% deduction for the amount of your section 199A dividends. It can be up to 20%. Now notice I'm doing 592 times 20% is $118. We're going to see this $118 show up on page 1 of the 1040, line 13. And it shows up right below our standard deduction. So it gives us an additional deduction right here of $118, and that's where that comes from. The only time that you're probably going to see these dividends is if you have REITs that you're invested in, which we're going to look at a little bit later in the video. You're going to see where this is generated, but that's something to be aware of. But if you can get them, great. It's just going to further reduce your taxable income. The last thing in this little summary section on this 1099B is your foreign taxes. A lot of times you might have investments that earn money overseas or internationally, and some foreign taxes will be paid. That foreign tax amount, the $18 that's shown here, or whatever your amount is going to be, is going to give you a further tax deduction or a further tax credit against your U.S. taxes. And that shows up on, well, first, let me go to the schedule. It's schedule, I think it's number 3. Schedule 3 is where this comes through. And you might have to attach Form 116 if you're required to, depending upon what your investment circumstances are. The $18 here is going to give you a tax credit. And so this $18 comes from here, from the 1099B to here, and up to the page 2 of the 1040. Here's that tax credit right here. As you can see, in this example, the total tax that was calculated was $2,008. This tax credit comes in and further reduces his taxes by another $18. Therefore, his tax liability in total is $1,990. So I'm just kind of showing you how this statement you get, I should say, the statement relates to different areas of your taxes. Let's look at a little bit more detail. This capital gain section I'm going to cover in another video. I'll show you how to do some basic stock sale transaction reporting. It's really easy once you're used to it. But let's continue. Let's move on here. Now, if you really want to see the dividend breakout of what dividends are ordinary versus qualified, each 1099B usually does a nice job summarizing that information for each and every investment you own, whether it's individual stocks, whether it's mutual funds, whether it's ETFs. I think you guys get the idea. You can see here's all the qualified dividends in dividend distributions. It shows you each type. It breaks them out. But of course, this is just additional detail. There really isn't much for you to do here. It's just there for you. However, there's two things I want to point out. As you can see here, this is a digital realty trust, and this has Section 199A dividends. So this is one of the REITs that I mentioned earlier where those Section 199A dividends are coming from. You can see like, oh, these are the investments that are leading to that amount of $519 I saw at the start of this statement. With foreign taxes, here is ticker symbol DVYE. And this is an example I wanted to show you. And this deals with foreign taxes because this ETF holds companies internationally, and that ETF receives dividends internationally. So therefore, there's going to be dividends, but also foreign taxes withheld. And it says various, but this is something you would want to look for. You'd want to see where your foreign taxes are coming from on your different investments. And usually there is a statement later on that summarizes all this. And let me just jump right to it for you guys. Most 1099Bs have a part where they summarize all this information if you have foreign income, because you're going to want to report your foreign in your tax software, whatever you're using, TurboTax, H&R Block, whatever. You're going to want to report your total amount of your foreign dividend income and also total foreign taxes withheld. Those are the two main concepts you want to report. In this example, we had total foreign source income of $188, and that's this amount plus this amount. And of course, we had foreign taxes withheld of $18.30. This information is important, and so that's why I wanted to point it out. And this is going to help you fill out your tax forms as we discussed earlier in this video. Now, your interest, like I said, I messed up. I forgot to put an example here. Now, obviously, we looked at our 1099B. We saw that there was no interest on the 1099B page 2, this right here. But just pretend with me that, pretend that there was the $5 of interest income, okay, from Ameritrade. So let's just pretend there was. So then what we would do is we'd come back here on our 1099B and we would list $5 here. So then we would have $5 of total interest income, right? And we would just list, just like we did down here, Ameritrade would also be listed up here. So you would see Ameritrade here, and it would just show the interest portion and the dividend portion. And that's essentially how it works. So it's not overly complex, but that's how you would report that. And most of the time, if you're using tax software, all of this is going to fill out for you automatically, so you're not going to really have to worry about it. I'm just giving you this information so that you understand what the heck you're filling out and what you're doing and what it means for you as a taxpayer. As I start to wrap this up, I'm just going to cover a few last things. Some people, and this might be your situation, you might have multiple taxable brokerage accounts. I've helped out clients who, I kid you not, they have 7 taxable brokerage accounts. And so it takes a lot of work to add up all this information, report it all correctly, this, that, and the other. But if you have multiple 1099Bs, and let's just pretend you have multiple dividends or you have dividends on each one, you should say. Let's just say I had $3,500 in the dividends here, and let's say I had $10,000 coming across in dividends on another statement. Well, that $13,000, if that's my total ordinary dividends and combined from all my 1099Bs, then on page 1 of my tax form, if that is the case, then it should show $13,000 in dividends here under the ordinary line, or whatever your total is. But you would just combine them. So if you have more than one statement or more than one interest statement, you would add them all up, report them on Schedule B that we looked at a moment ago, and just look at adding the totals up here. That's how that works. Nothing overly complex, but just something to be mindful of. And the last thing I want to point out is the Schedule D tax worksheet. What this worksheet does, and this should be in your software when you're filling out your capital gain cells, when you're filling out your qualified dividends, it's going to look at all of your capital gain related income, and this worksheet's going to determine how much tax or what capital gain tax rate you pay on that income. All of your other forms of income are generally taxed at what you call your marginal tax rate or your ordinary tax rate, but qualified dividends, long-term capital gains, and things like that are taxed at a special capital gain tax rate as the law stands right now. All right, ladies and gentlemen, I hope you got a lot out of this video in reporting just interest and dividends. And in another video, I'll be reporting how to report stock sales or ETF kind of sales, things like that. But be on the lookout for it. Be subscribed to the channel so you don't miss it. I know I didn't cover bond interest or tax-exempt interest. Those two concepts are actually quite complex, believe it or not. So if I do a video on that, I would like to do a separate video on that. And I don't have a good example I can show you at this point in time. Let me see if I can find examples of those kind of things. And if I can, I'll produce a video on those topics. I hope from seeing this though, just from a interest and dividend reporting perspective, that it's not quite as scary as maybe you think it is. And seeing how those numbers from your statement, the 1099-B, relate to different areas of your tax forms. That's the most important concept to understand. If you know where those numbers should appear on the forms, regardless of what software program you're using, at least you'll have a better understanding of how it should look once you've input everything. And that's the idea of this video, is to help you with that, to take away some of those fears. Because like I said at the beginning of this video, people don't know how to report investments. Investments are confusing enough as it is, but when you add taxes on top of that, they just basically give up and say, here, I need a professional to do this. You don't necessarily need a professional to do this. If you have lots of 1099-Bs, yes, I would recommend you see somebody. It's a lot easier for a professional to handle it. But if you just have one with some basic activity, like we're looking at here, then I think you could do this. I don't think it's overly complex. All right, guys, you know what to do. Like the video if you liked it. Share this information with your family and friends. Subscribe for future weekly videos to become fiscally fit on finances, investing, and taxes. I'll see you down in those comments. Live life uncaged and have a damn good week. Peace.